We're seeing a big move and the markets are threatening and pushing up. I want to see gold come down to 3,500. I want to see silver crash to 40. Everyone gets overly bullish. They pile into everything I listed off earlier. Usually the really aggressive traders move in right at the end just before a trend is about to reverse direction when we're in an overall downtrend. So again, emotional traders tend to get really excited just at a market peak.
It's Tuesday, April 14th, and a second round of U.S.-Iran discussions or negotiations is supposedly under planning, although nothing has been officially scheduled yet. The markets are taking this as very good news, though. The S&P 500 is up 1% intraday. The NASDAQ is up 1.3%. Gold's up 1.3%. Bitcoin's up 5%. And the Treasury yields are down. The 10-year yield is down 0.4%. Chris Vermeulen is back, Chief Market Strategist at thetechnicaltraders.com. Welcome back to the show, Chris. Good to see you.
Yeah, thanks for having me, David. Always a pleasure.
So the stock markets are in a bit of a rebound period right now as we speak, but even over the past couple of days. In fact, over the past week and a half, there was a huge winning streak for the S&P 500, the most number of days up in a row since, I believe, last year. Chris, what is going on right now? Are we in a consolidating period?
Yeah, I think there's a lot going on. We could step back from the bigger picture and just kind of fall back to some basic cycles in the market. A couple of weeks ago, right at the end of March, as the market was selling off and it found that bottom, we actually had a confluence of multiple different time cycles bottoming that I follow, which is I consider it an intermediate low. Usually it's a standout low on the charts, and we tend to see the markets go higher. And then, as you just said, David, I think we had a 6 or 7 day winning streak back to back for the equities market. We haven't seen that too often. But if you look at the stats for that, typically over the next 2 weeks, the market is actually still higher after that 7 day rally. So this is definitely pointing to higher pricing. We recently had a little bit of selling this week on Monday at the open. We had some news, obviously, with the Middle East. Stocks gapped sharply lower in the morning, and they have rebounded with a vengeance from the Monday low to where you and I are talking now, which is Tuesday afternoon. And we're seeing a big move, and the markets are threatening and pushing up to maybe hit all-time highs here in the next couple of sessions. So we're definitely seeing resilience. We're seeing a big flow into speculative plays. You touched on this. We got micro caps and small cap stocks surging. We got Bitcoin surging, silver surging. That is telling us people are going all in. They're getting in aggressive with riskier stocks. And money's is moving away from defensive, right? We're seeing consumer staples, utilities, dividend paying stocks underperforming. So people are excited. And I think spring is in the air and people are positive and everybody's buying here.
I think last time you were on the show 2 weeks ago, you had maintained a long position, at least for the short term. Is that still your position right now?
No, we exited the market about a month or so ago, quite a while ago, before the market went into a sell-off. We've been in cash. And we recently got long. We actually just hit a profit target today, 2 profit targets on 2 different positions. And so we're back long this equities market.
At what level do you think the S&P will rise to for you to feel that it's been overbought and it's time to either take profits if you're already in or start shorting?
Yeah, well, let's take a look at the charts real quick. And if we take a look at the S&P 500 futures here, you can see we had this big standout low bottom over here. We've had this huge kind of V-shaped recovery. The market's screaming higher, and we are like in striking distance of all-time highs. I was talking to subscribers this morning saying the market is going to be gunning for all-time highs. What happens is the market likes to make an all-time high and then make another nominal, slightly higher high and another higher high and another and another. That's how the market sucks people in. And you'll notice each time we hit one of these highs, we actually had a big bout of selling. And institutional, we have been seeing a lot of distribution selling taking place. I think big money managers are lightening their load. And so the market is gunning for another all-time high. That makes everyone, general retail investors, get excited. They hear the market's taking off. It creates FOMO. People start to drive the markets higher. It creates liquidity. And also that'll spark anybody who's still short this market to get the heck out and cover their shorts. And that creates even more liquidity. So I'm excited for the markets to hit all-time highs. It'll be interesting to see if we see high volume selling, big institutions trying to lighten their portfolios as we get up into this new all-time high territory. But overall, I mean, I think going forward, this market's got room to run another, 2, 3, 4% to the upside, maybe even more than that. But again, right now it's a little overextended. When we go and we look at our short-term trend chart on the left here, this is our 30-minute chart showing the short-term trend was down, red bars, and then it's kind of turned into an uptrend. But what we had here yesterday, which was Monday at the close, is this red indicator spiked up here. And that means we've got a wave of FOMO. And that means people are just piling in, they're covering their shorts, they're chasing price, and they're doing it right up at resistance. We're right up into this resistance area. Whenever we have FOMO, we tend to see the stock market after that. We tend to see the stock market kind of chop around and pull back for a day, take a bit of a breather. So we're at resistance. I wouldn't be surprised if we have a little pullback for a day or two as this market takes a bit of a breather. But the trend is up, and you've got to be long equities. And I think we're going to see all-time highs here in the next couple sessions.
So, Chris, how much of your portfolio, I think, should you be in equities right now versus cash if you had to make an allocation?
Yeah, our allocation with our model portfolio, we're 60%. Well, we're 45% invested. We just sold off 15% of the portfolio today, locking in a QQQ profits there. So we're 45% long. Our stop is, up at our entry price. So we kind of got a free ride here to let the market run and do what it wants to do.
Do you think that Bitcoin rising 5% today, and indeed actually it's up from $60-something thousand to well above $75,000 now, do you think Bitcoin is acting as a leading indicator for risk on behavior, Chris?
Not really. I mean, I think we're seeing the risk on assets. They're still in a bearish formation. There's no doubt Bitcoin is in a bear market. It's created a series of what look to be bear flags. And typically everyone gets overly bullish. They pile into everything I listed off earlier, which is the micro caps, small caps. We're getting Bitcoin popping and moving. Usually the really aggressive traders move in right at the end, just before a trend is about to reverse direction when we're in an overall downtrend. So I don't think it's a leading indicator. I think we're just seeing Bitcoin move with the equities market. When everybody's panicking, selling in stocks, we see Bitcoin go down. When everybody feels like they want to buy and own stocks, we see Bitcoin go up. And that's kind of what I think we're seeing here at this point. I think Bitcoin could continue to move a little bit higher. And I think we still have several days of potentially stocks pushing higher and Bitcoin. But to me, it is still in a downtrend. I'm considering this sideways and higher price bearish. And I do think it'll eventually resolve to another leg down. But again, we got to take it one bar at a time. Bitcoin to me, though, is in a very clear downtrend. I'm not interested in it until it does, it will really have to do a lot of work on this chart, like work itself up and build some type of bull flag pattern. Then if it starts to break out and maybe wants to run, I might be interested in buying it as it's starting to pick up speed for another move higher. But again, I'm not excited about Bitcoin at this point. A lot of times when we see Bitcoin move up, the last time we saw this type of sentiment was right over here. And then it kind of fell off a cliff right after. So again, emotional traders tend to get really excited just at a market peak. And I think we're getting close to potentially that with the equities market near all-time highs. Again, there's a little bit of upside left, so Bitcoin could run a bit more, but I don't trust it yet.
Before we continue with the video, let's talk about your most important asset, your personal data and privacy. Now, your personal data is constantly being collected and sold and exposed online from places like shady data broker sites and even big data breaches. So your private information like your name, address, and phone number is out there on the internet, and it's easier to find than you actually think. That's why I recommend today's sponsor, Delete Me. It takes a few minutes to set up, and they handle the entire process. They find where your information appears, verify those listings, and submit removal requests to hundreds of data broker websites. They also continue monitoring over time since this data can resurface and reappear. I've been using Delete Me for over a year now, and their privacy reports clearly show that over 325 listings of my information have been removed. Check it out now. Scan the QR code on the screen or go to joindeleteme.com/DavidLin, link in the description down below, and use my code DavidLin for 20% off. Take control of your privacy today. Now back to the video. Sentiment among traders right now. You mentioned that, again, a winning streak of this magnitude is uncommon, and there seems to be some more bullishness in the air. Has anything happened in the last 2 weeks that has shifted your sentiment from more bearish to more bullish, or vice versa, one way or the other?
Yeah, there's several things. Like our strategy follows about eight different types of money flows to various pockets of the markets and different currencies, different asset classes. And so we have seen a shift. We have seen a shift of people moving away from some defensive spaces. We're seeing people move into the risk on. So we are definitely seeing it's not just small traders, it is big institutions. Big money has been flowing and moving the needle in terms of they've been getting positioned for a move higher for the past week and a half or so. And we've seen that on our charts. But again, I use like a proprietary mix of combinations of what I do in order to track what's going on here. So, I mean, the fact that we've been seeing recently, gold's not really performing much of a safe haven play. It seems to just sell off with the equities markets. I think precious metals, they have a little short-term bullish price action. I think we could see this move a little bit higher. But right now, the big money flows are definitely moving into growth stocks. And we're seeing that even if we look at our hot list over here, we've got SMH. This is top of our hot list. It is outperforming everything else. And our strategy kind of shows, this red bar across the bottom. There's a time when you don't want to own stocks, and then there's a time when you want to get in own stocks because they're going to be favorable. And I like semiconductors simply because it's a lot like, gold miners. If you ever watch the show, what is it? Gold Rush, although I haven't watched it in a long time. But it's the same thing. The gold miners take all the risks. They put on all the work. A lot of them don't make any money. The people who make money are the people who fix the machines, supply the fuel, provide all the repair parts and replacement parts. Semiconductors are like that, right? A lot of AI companies are just bleeding money, borrowing and spending and borrowing and spending. But then you get the semiconductors here. They're just supplying these companies that are taking all the risk and all the gamble. And so semiconductors are just screaming higher. I think we've got the movement in AI is still very strong. I think it's shifting a little bit away from maybe some of the specific AI companies and focusing more on the actual companies supplying the materials, the mechanics of the thing.
Anything that's overbought right now, Chris? And by the way, we're going to get Chris's outlook for the S&P and all the other asset classes. We're going to get his key levels. But for now, anything that's overbought?
I don't think anything's really overbought. I mean, I would say the stock market's just had a really nice bounce when we look at this really strong knee-jerk reaction bounce to the upside. I would say the stock market's ready for a little bit of a pause. It is at resistance. But overall, I mean, semiconductors, I think, are overbought. If semiconductors pull back, it also probably means the broad market is going to pull back at this point. I think there's some spots where there is some upside potential. So I think equities, they've had a nice move. I mean, we've just locked in partial profits here to reduce our exposure. I think where there is some upside is actually going to be, I think, precious metals. I think gold has got a really nice chart pattern. If we see a little bit of fear in the market, I think gold might come back to life and push up to 5,000 or a little bit deeper, 5,100 or so. I think gold's got a very short-term trade opportunity to the upside because I think it can move with the equities market if it goes higher. But also, I think if we have a little bit more fear, a little more bad news, I think gold will actually maybe start to shine a little bit here and move higher on the weakness when equities pull back. But yeah, right now, anything extremely overbought, I would just say equities have just had a very nice run, another push higher. I think it's ready for a little pause before it goes much higher.
Gold hasn't done that in a while, which is to shine when equities have fallen. And so gold investors or traders waiting for that to happen have been disappointed ever since late February. Is that era over, you think, Chris, at least for now, that gold hedges against equity volatility, at least in the short term?
There's no doubt gold and silver were performing kind of as they should and normally do. If we zoom back on the chart, we've been seeing them perform very well up until midway through last year. And then we got into this big consolidation, this big consolidation through most of last year. And then we saw this huge euphoric phase. And this really got everybody like overly excited. Everything's going to the moon. There's no stopping it now. That's where everybody piled in. And then we had this huge correction, which silver got hit even harder. I think this correction really hit a lot of precious metal traders hard. This is like, getting punched in the face. I think everybody in the precious metal space is still kind of wondering what happened. How did they not lock in profits, and how much they've seen things pull back and correct, and is this a top? And so I think we're naturally just seeing investors not knowing what to do when it comes to precious metals, and their money's just moving in and out and moving with the equities market at this point. But I do think it's almost been long enough that we're going to start to see precious metals start to work a little bit more like a defensive play, where I think they could move higher while equities trade sideways or pull back. But we haven't really seen that quite yet. If we look at the silver volume, if we take a look at silver, we can see here volume dramatically different. You can see how this huge pullback created a ton of fear, and now there's very light volume. It's just people don't know what to do. They've given up on it. They're like, oh, I bought at the peak or whatever it was, and they're like, I'm just going to not trade it anymore. I'm just going to leave it. So this is a good thing. The market is trying to shake people out. And then if it doesn't shake you out, it will generally wait you out. And so silver and things that trade sideways, they go sideways sometimes until there isn't any interest, until people give up, and then it'll start to move. So again, I think we're just waiting to see how investors are going to react, and for metals to come back to how they used to trade. And I think we're getting closer. There's starting to be enough time in here that people are kind of licking their wounds, realizing that, hey, this is just a typical pullback in silver and gold in that type of market environment.
That chart right there, don't touch it. That chart right there that we're looking at with that time frame, does that look like the complacency phase where we're seeing right now? Does that look like the complacency phase in your multi-cycle chart that you like to show?
Yeah, I mean, if I can pull that up right here, if we were to look at this,
I mean, that looks exactly like that, doesn't it?
Yeah, so we had this euphoric phase, which is what I was screaming. I mean, we exited out of silver at 113 when everything was screaming, and that was the full-on euphoric phase. And now it's pulled back, and now it is trying to figure out what it wants to do. And that's the big question: is what is silver going to do? Is it going to correct and go lower based on Fibonacci extensions? It says we're going to 38, $40 per ounce for silver, which will come right back down to this breakout where the euphoric phase took off. The gold chart is doing the same thing. The gold chart shows, based on Fibonacci, the downside move brings it right back to 3,500, which is gold was functioning normal up until this point. And then suddenly it became all the craze, the euphoric phase. And so the chart is actually pointing to gold coming all the way back down to this point as well. To me, this is going to be an amazing opportunity. I mean, so a lot of people don't want this, but to me, I want to see the stock market pull back. I want to see gold come down to 3,500. I want to see silver crash to 40 or $38. It is going to be an ultimate opportunity. And the market has a way of, whoever chased price, when people are all chasing price and driving it up, and it's like an emotional move, the market has a good way of shaking them all out, getting them back out, and then they end up taking a loss on it. And then I think we see things stabilize, and then I think gold and silver will be a great opportunity. So I think people should be gunning for 3,500 for gold, 40 for silver, because it's going to be probably the last opportunity to get back into those metals at a crazy good discount. And I think in the next 5 years from now, we're going to probably see gold and silver up hundreds of percent from here. So the question is, how long is it going to take for gold and silver to correct? That's the big question, and we just have to wait. The flip side of that, David, I know people are going to ask, well, that's the bearish side. The bullish side for both gold and silver is we've had this beautiful bull run. Now we've got it building this multi-wave, this bull flag pattern, which can be seen as a very strong pattern. If gold starts to break out and builds a base, it will generate another buy signal at some point here. And then we're off to the races to 7,000, 8,000, 10,000. And so, what I want to do is avoid this type of noise and big corrections and, wasted years. I just want to make sure I lock in gains when it's screaming overdone. And then I want to get back into the asset class, either at a killer deal or when it's starting to break out and it's going to have an imminent return. It's going to just start that next run and take off. but I don't want to hold it for a year or three before that happens. There's other places you can put that money and generate return.
Can we take a look at the TSX, the
Sure.
Canadian S&P TSX Composite Index? This has been killing it, Chris. Over the last 1 year, on my screen, the TSX is up 43%, while the S&P is up 28%. In the last 3 months, the TSX is up 3.5%, while the S&P 500 is pretty much flat. So it's been beating the American stock index ever since last year.
Mhm.
Maybe let's take a look at the charts. I think part of the reason, at least recently, of course, is the oil and gas prices going up, and I don't know to what extent that's impacting Canadian oil and gas companies directly, but I do know that roughly 20% of the TSX is oil and gas. So if oil and gas companies take a bid, so does the entire index. But let's just look at it from a technical perspective, Chris, and see what we're looking at.
Yeah, well, if we take a look at the daily chart of the TSX, Toronto Stock Exchange, you can see it's doing very well. I mean, it had a very sharp pullback with uh, recently with the rest of the market. When there's global and in mass selling, it'll pull pretty much every index down with it. Doesn't matter the country, but we generally see the Canadian Stock Exchange resource rich do very well near the end of a major economic cycle. Usually stocks become overvalued, commodities are undervalued, and so commodity stocks tend to do exceptionally well, and the Toronto Stock Exchange usually outperforms for several quarters. It'll outperform the U.S. stock market several quarters before the market's put in a top, and we've seen that. And you just mentioned that, and so this is one of those other signs, just saying, hey, we're slowly maturing to getting to, I think, an equities market major top here, and this has been a very good play. We really saw the S&P 500 since October of last year. The S&P 500 traded sideways and it had a big pullback. The Toronto Stock Exchange has done the opposite. It's gone up and to the right and bucking the trend simply because it is resource heavy, and resources have been doing very well, especially energy with the recent chaos here.
Is that a reflection of an improvement in the Canadian economy, you think?
I don't know. I mean, I don't follow the Canadian economy too closely. I don't know if it's improved that much. That's not my specialty, but I really think it's more
It's
so
an
investors moving into
interesting
resource.
it's an interesting topic for Americans. The concern from the Iran war, well, one of the concerns, of course, is that higher oil will stay, and if that happens, consumers' discretionary power is going to wane because people need to pay for gas, and higher gas will probably mean higher diesel for long, which would mean higher trucking prices and food and other related items that are being shipped through ports or transported through trucking. Those will go up proportionally as well. In Canada, though, if you take a look at the Calgary real estate, which is something that I looked at in the past, that price index for the Calgary homes closely tracks the oil price. And so it's interesting how if oil and gas does well, yes, consumers have a little bit less money to spend, and at a certain point, you're going to get demand destruction. But before then, the oil and gas industry might boom, which may create more jobs and opportunities for Canadians. It's a bit of a trade-off here. How do you see it?
Yeah, well, I think your scenario with Calgary, I think that's a little bit more of a very niche kind of bubble territory.
I
My
see.
my dad used to own a ton of real estate there. Real estate goes up with oil and gas pricing, and it goes down. I have friends who moved there who worked on the
Yeah.
pipelines. You see a huge boom in housing when oil goes up because everybody moves there. They all want to get rig jobs and all that stuff.
Hmm.
And then when gas and oil plummet, we see real estate fall, we see spending fall. So to me, Calgary is a very unique bubble of money from chasing
Hmm.
people chasing oil pricing and opportunities. So I think that's outside the norm, but there's no doubt if energy prices keep staying up and all of that, I think probably Calgary will do very well because they're going to be making money, they're going to have secure jobs, and we'll see that kind of bubble continue to hold up there.
What is your outlook overall on Canadian growth? There's been some pros and cons. One of the things I'm personally looking forward to is more trade deals with China, because why not, right? And cheap EVs from China will come and possibly bring down the rest of the auto market, especially the used car market. Looking forward to that. What are you looking forward to?
Yeah, I'm not sure how the growth and the earnings, all that stuff is in Canada, but
Hmm.
I mean, I think it'd be nice to get some deals. It's crazy how, the difference in vehicles, what we pay here for a vehicle
Yeah.
compared to what you can get in China. That being said, I don't know how safe those are. I mean, I know North American stuff or North America rules have a lot of safety in place, so
Hmm.
that obviously we don't get hurt. I think you go overseas to China, I think the quality in most cases is very low. There isn't a lot of safety feature. Just look at the difference. You buy something that's steel or aluminum from China and compare it to American stuff. You can bend steel and snap everything that's from China and it rusts right out versus, so that's the big problem. I love the idea of lower priced vehicles. Everything now seems to be like 100K for a half decent vehicle
Yeah.
or truck, and you go over there and it's like 5, 6, 7K. You can get yourself a full EV vehicle.
Hmm.
So it's going to be interesting. There's a lot of pressures, a lot of costs going up, and I think Canada might start making some bigger deals. I'd probably burn some bridges with the United States if we start
Hmm.
bringing in from China and even more. But I mean, we already do. Every country does. China really does feed the world with most of our stuff.
Closing off the commentary for today, is there anything outside of equities that you really like right now? I mean, with bond yields having moved up a lot, bonds have taken a hit. Is that a good buying opportunity for the fixed income market, you think? We're just generally expanded to anything else outside of equities?
Yeah, I think the bond market and interest rates is really delicate here. I think it's very much driven right now by what's going on with the price of oil. We keep seeing oil pop 7%, drop 7%, the 10-year yield, and the rates keep jumping. They pop and drop. And of course, if rates surge, then we see bond prices fall. So it is very noisy. I feel like it's very difficult to gauge right now. I think interest rates are going to stay where they are, roughly in a range, or continue to grind higher. I don't think we're going to see rates plummet and fall. So I don't think the bond market is like owning bonds. I don't think you're going to see the bond prices go up too much. I think it's a pretty dormant market. If for example, we take a look at the TLT chart and just zoom way back several years, it really is putting in what looks to be a pretty a bottoming formation, and there still may be a couple more years of price struggling. So I kind of feel like the bond market and interest rates are kind of locked up. Rates, I think some people want the rates to go down, but if we got high inflation, high energy pricing, then it's going to be really difficult. As you mentioned earlier, if energy prices are up, it costs more to produce stuff. You go to the pump, everybody's spending all their extra money on fuel. I mean, my truck is $200 to fill up now, which is
Yeah.
my daughter's taking it over. She just got her license and she does not
Nice.
like that. She loves trucks, but she's like, holy cow, 200, I have to work a lot to fill that truck up.
Yeah.
But yeah.
Got to wait for those cheap Chinese EVs, $30,000 for an SUV. All right, Chris. Um, I
You
promised
wanted
the
to look at
audience we
the S&P 500 and some targets there.
Yeah, I promised the audience we get some targets before we go. So let's reveal your targets now. Let's start with the S&P 500.
Well, I mean, we can look at a very big picture, which paints a huge upside target for the S&P 500. So we could go to the last major cycle low. We can go up to this peak here, and then we can come down to this recent cycle low just from about a week and a half ago, 2 weeks ago. This will paint us where this momentum could potentially carry us. If we squish this chart down, we'll get the upside target. You can see here the S&P 500 has potential to rally another 10 or so percent. And then if it continues from there, we can see it go another 20%. Do I think it's going to happen? I don't, but I'm definitely not going to bet against the market. I want to make sure I'm long if this market wants to run higher. So that's kind of the big picture where we can see. So that's 8,564 on the price of S&P 500 futures. Now, if we were to kind of zoom in, look at the short-term chart and just use a short-term Fibonacci just based on high momentum. So based off this recent rally up, this pullback. Now, right now we're seeing everything in this high momentum phase. Right in here where we are, we should start to see the market have a bit of a pause or pullback. So this is basing it on this rally up, this gap down, and right where we are now, we should see the market pause sideways for a day or two. If it does that and gets traction, then we're going up to about 71.50. And so short-term wise, we do have about another 2.5%, 2.25% to the upside, as I mentioned earlier. And then after that, we really just need this market to cool down. We need to see some type of, week-long pullback, which would build a nice bull flag and give us a more accurate target. Just, I don't like to give away these huge targets based on these massive standout lows, because generally, if people see huge upside potential, they throw all risk out the window, they get over positioned in something, or they buy leverage and they're like, oh my gosh, if it's going to rally 20%, I'll just do a 3x and I'll make 60%, right? And then it doesn't happen, and then they blow their accounts up. So yeah. I always like to take it one small chart pattern at a time, understand the underlying trend, and we just navigate with that. I don't trade the big chart patterns like this. I focus the money flows, the trends, going forward.
And Chris, let's do gold now. You said, by the way, several 100% gains in a couple of years. That's predicated on, I guess, at the S&P 500 going up, or perhaps inflation going up.
Yeah. So I mean, let's just go back. We'll go to a weekly chart here. If we were to take a look, I don't want to get too much in the details here, but we've had this last big run. We'll use a Fibonacci retracement telling us where gold should technically pull back. Based on Fibonacci retracement, usually you pull back 38% or 50%. And so we've already hit the 38%, it's bounced. The technical analysis using Fibonacci on gold actually points to coming down to about 3,600, which is that 50% retracement. So if we were to just use an extension of where it looks like gold is going to go, for the next run, we can calculate that out based on the current pullback. If gold just starts to find a bottom right here, we're going to see gold move up to about 8,000. That'll be the next upside target. If gold ends up correcting deeper down to the 50%, it'll go to about 7,500 to the upside. And then from that level, it'll probably have some pause and pullback, and then we recalculate the next leg. So I like to calculate just one leg at a time. So that would be a pretty good move. I mean, obviously you go from 3,500 to 7,500. That's an easy 100% to the upside for gold. So those are kind of the next sweet range, depending on where gold finds a bottom. And I do think, if gold does go down to about 3,500, we're probably going to see a big sell-off in equities. It might not happen anytime soon. It still might be 3, 4, 5, 6 months out. But I do think we're eventually going to see a big bout of selling in equities. Metals will get pulled back. Silver will come back as well, come down to probably $40 an ounce. And then we'll find a massive buying opportunity, a major bottom in precious metals based on technicals to start stacking again.
Chris, thanks so much. Let's wrap it up here. Where can we follow your work?
The best spot would be to go to my website, which is thetechnicaltraders.com. Or you can follow me on YouTube, The Technical Traders, and I really just share. I manage my own portfolio. I share exactly my allocations, what ETFs, what allocations and targets and stops, and everyone can learn from my morning videos and follow my trade alerts.
Excellent. Appreciate it, Chris. Thank you for watching. Don't forget to like, subscribe, follow Chris in the links down below. See you next time, Chris.